Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Welcome. Well, Apple is the big item that's been in all the papers, but what's happened to Apple? Why has it gone down? Why is the most widely held stock by institutions gone down? Well, there's no hard and fast rules on this, but we're going to look at the stock and analyze it and how far we think it can move from where it is right now. But a couple of things I want to bring to your attention, which I think are pretty interesting. First of all, when we look, this is a long-term chart of Apple, and we're going all the way back to 2007, and you can see quite clearly on this chart we do not get a lot of red monthly triangles. So you're looking there, you're only looking at 5 since 2007. So they don't come along that often, but when they do, it usually portends to a break in the market. You can see right here, and we've just started one now. And the other thing that's interesting to me is the fact that when we went, this blue line you see here is a 200-day moving average right here. You can see, I think this is the one right there, and you can easily put this on your own charts using Market Club. Every time you've gone down below the 200-day moving average, it takes Apple quite a while to get back up and over. It took quite a while here, and it took quite a while here. It took about 8 months, as a matter of fact, for Apple to make new highs. So the reality is we peaked out in April, and we had a monthly trade triangle just kick in a few days ago. So we're going to be, I think, negative on Apple, and not negative, but on the defensive for quite some time, about another 6, 7, 8 months. And how far can we go? Let's take a look at that. We're going to use our Fibonacci tool. I'm just going to get it a little closer in so you'll see where we're measuring from. So we're going to take the Fibonacci tool, which is right here, and you can see a little yellow box appears on the left-hand side. We're going to measure from the high point right here, drag it to the low point back here in April of 2013, and that really takes you down to potentially 38.8%. 38.2% would be $103.19. 50% is $94. So I think it's pretty safe to say you could see this market back down $100 mark. And I want to show you something on that ground. This is the previous high back in September of 2012. Just going to draw a simple line across here. Psychologically, the $100 level, it'll be a huge psychological stop point for Apple. I would say there's a good chance we'll see Apple reach that point or trade around that point, maybe 102, 103, and I think that's what we're looking for right now. So again, look for Apple to be on the defensive. You may see some rallies back, maybe to 120, but that I think is going to be it for the time being. Original signal of 123. The weekly kicked in at 120, but the original signal is 123.10, and that's what you have to look at. So we are oversold. Not to say we can't stay oversold. Look at this point right here when we went down, 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 down. Look at how we stayed below the 50 line. Any rallies back to 50 on the RSI should be sold, in my opinion. And I think we'll see Apple continue to struggle trying to sell more iPhones. The Apple Watch, in my opinion, was pretty much a non-starter, did not do a lot to the company. Unless they come up with something extraordinary that no one's heard about yet, I can't see Apple going anywhere but sideways to lower for the next 7 or 8 months. Let's move on. Here's another stock we found that's kind of interesting. Not as sexy as Apple, of course, but it's Coca-Cola. It's been around for a long time. Plus 100, kicked in at 41.69 yesterday. This, I think, can get back up to the highs around 44. So again, not a big move, but certainly I think if you like Coke, if you drink Coke, if you like the stock, this would be a time to be a buyer of this stock. Crude, on the other hand, continues to sort of evaporate here. It's gone down. It's very oversold. We may see a technical bounce in that market, but I don't think we'll see much more than that. Just best be out of it. All of our trade triangles are negative. Pretty much the same pattern on the gold. All of our trade triangles are negative. We've flattened out a little bit, but what is interesting, you're seeing some sort of slight divergence here. Nothing dramatic. I think probably just give it some time. There's no reason to be involved with gold right now. On the euro is still minus 90, still negative, still below the 50 line on the RSI. No reason to be in this market right now. This is the Dow. We still have our trade triangles negative on this, but it's interesting that we're still below the 50 line. A little bit of a divergence here, and let me show you what that is. On the RSI, you've got prices here like this, and you're seeing this sort of go up like that. So again, it's a little bit of a divergence, nothing to get dramatic about, certainly no reason to rush and go and buy this index. So let's move on. S&P cash is mixed 55, a trading range of flattening around the 50 line. I think probably if we have a good day today on the upside, certainly taking out this high here, which is 2,114.34. If we take out that high, I think you've got something, you're going to challenge the highs again. The Nasdaq, we've been talking about the Nasdaq all along. It's a different kettle of fish. It's over the 50 line. It's plus 100. The trend is still very positive in this market, and we expect it to continue. And we would not be surprised to see a move back up to the highs here and even new highs in this index. Hey, we've covered a lot of ground. Apple is not a stock to be in right now. There's no reason to try and pick a bottom. The trend is down, and psychologically and also technically we could be negative for quite some time in the stock, meaning, or just flat, meaning it's not going to go anywhere soon. There are lots of other tech stocks that are far more exciting and offer far more rewards. Hey, I'm Adam Hewison. Thanks for stopping by. Every success today. Have a great trading day, everyone.